55. But I don't really think there's any reason for us to move very much in the overnight. There's not too much data overnight either. I think we have about like a 3 month auction from Japan, and then we have some like PMIs in the morning. EU, Germany, construction PMI. Nobody gives a shit about that. So yeah, basically nothing until non-farm payrolls. I guess the yen 3 month auction could have some impact, but I doubt it'll be very much. Jesus, we still closed below 5,700. Kenny stole all the money. That was fun. No, it wasn't. Don't lie. All right. Well, that was a whole lot of work to close flat on the day. We did not get the market maker's expected downside move of 56.60, but we did get mine at 56.85. Multiple rejections off of Gamma Max, both at the monthly and then again, or at the weekly and then the monthly. But support at Delta Neutral, which is we've had support at that level pretty consistently throughout the week anyway. And then Delta Neutral just moved to that level last night. It was lower previously. I mean, tomorrow doesn't seem particularly well set up to move hard in either direction, but options are extraordinarily overpriced. I mean, to the upside on ES, we still have the long-term trend as resistance. We've got kind of this big range below us that we could drop down to on any rejection. I would say that the downside is still slightly favored. I just don't know if the data will support that. Commodities up today, almost entirely on the back of oil. I mean, agricultural did okay. Copper came down. Gold and silver are up a little bit, but oil's up like 5%. So mostly just oil. Dollar also up with oil. And yields at the top end and the mid of the curve moving up pretty rapidly. And the yield curve re-inverting, getting pretty close to it. It's given up most of the uninversion since the beginning of September. Correlation kind of started to turn around a little bit toward the end of the day. We got a tiny pump off of that, but not much. And overall, the trend is, the correlation is moving higher and dispersion is continuing to break down. The carry trade, however, is getting levered up really, really hard at the top end. Almost 6.9, getting very close to 7x. Just a few days ago, we were at 6.22. So fairly significant change. But as that gets levered up, that forward demand for vol is going to rise, right, as the yield curve inverts. And we can get backwardation in the VIX, which is, what caused the last two corrections, right? We get too much demand on vol and it squeezes the short vol out. Very, very close to that. Today, forward yield on vol ending at negative 3.18. Just a couple of days ago, we were at like negative 17%. So that's a pretty significant move. And the yield curve re-inverting reinforces that. Correlation, bond vol probably up a little bit. We had some big moves today. Skew moving back to the upside again. Yesterday's close, I'm not sure. That's probably going to stay flat through today. I don't think we saw too much tail risk hedging picked up. Not a lot of put buying today. Mostly just a lot of option selling. 64.34% of the S&P above its 20-day moving average. Still seeing correlation like between VIX and cash VIX, or VX and cash VIX, break down on the daily, and I believe it's still moving higher on the weekly. Yeah, it's about the same as yesterday on the weekly, but as those are becoming uncorrelated, we're seeing volatility rise, right? So that's because the yield curve's now uninverted, but re-inverting, right? So keep an eye on that, but it does look like if this, continues to become less and less correlated, we're going to see maybe another sharp spike in volatility. Fed fund futures now pricing in 0.43 rate cuts for January, so that's continuing to decline from just over 2 rate cuts by Jan a couple days ago to now starting to move closer towards one one cut. Obviously, not at the halfway mark yet, but pretty continuously moving down. This is probably what we should be talking about. Also, we've still not tested the 56.69 level. I don't really know if there's any buyers there. There might be, but we're not getting really strong bounces off of these lows, right? I mean, there's been no like, 56.75 to 57.50 kind of bounces. The upside on SPX above 57.25 is heavily sold. And it doesn't appear that any data is going to be coming in that's going to squeeze those positions off, which means, we're probably going to continue to stagnate here unless we lose a major level and vol spikes. So that's, I guess, kind of what we're waiting on. We'll see how it goes. But, yeah, 56.69, a very important level to the downside. And we have yet to test it despite coming really, really close 3 times this week. If we do get a bounce back to like above 56.30, I would say that we probably consolidate out, maybe get a new all-time high, and then we might get another breakdown like a week and a half out. Axiom is 55. Yep, it's running back up. I mean, oil's going nuts, so it's bound to get a little bit of that. The orange line has been your prediction all along. Yeah, that's like the market maker's expected move is the green and red, and then mine's the orange one. God, what? Picky eaters give me the ick. Okay. He didn't know. Oh. I told everyone that. Didn't I like write it one time? I don't know. Maybe I did. You're a god? Alright. Anyway, thank you guys so much for tuning in. I will see you tomorrow morning after the data. Later.